G'day folks, welcome back again. S&P 500 NASDAQ today. Now just be careful, we're looking at a potential retrace at least, or turning bearish longer term. So the market's weakening slightly. We'll have a look at the charts in a moment. Again, never ignore those divergences whenever we cover them. Also, don't forget, hit that like and subscribe button, but also reference the +1 videos to get a deeper dive into some of our trading strategies which we cover, including today. So as of today, August 20, strong earnings power with tech in the lead. Second quarter was the strongest ever for S&P 500 companies, with 84% beating earnings estimates and 58% raising full-year guidance. Mega cap tech firms Microsoft, Nvidia, Apple, Meta and Amazon powered gains with 26% EPS growth year over year. AI optimism still strong. Morgan Stanley projects AI could add up to $16 trillion in market value, boosting long-term fundamentals and fueling enthusiasm around AI-exposed names. Valuation caution amid geopolitical inflation risks. Forecasts vary from Wall Street's 6,600 to around 7,100 year-end targets to RBC's more cautious 5,730, amid concerns about tariff, sluggish macro indicators and high valuations, with a forward PE ratio of 22. Geopolitical tailwinds and headwinds from Middle East conflicts. S&P forecasts warn that escalation, particularly a Strait of Hormuz disruption, could materially disrupt global growth via oil shocks and inflation spikes. The RBC warns that an Israeli-Iran escalation could send the S&P down 20% to 4,800 to 5,200 range, fueled by valuation compression, GDP drag from inflation and dampened sentiment. Market responses have tended to be measured. The S&P dropped modestly by 0.4% after Israeli airstrikes in June, showing resilience, though oil jumped around 7 to 11%. So this is the S&P. Now we always look at the long-term trend to get an overriding idea as to how well the trends are going longer term, right down to the micro levels. So here on the weekly, we've got bullish movement on the price, well above the moving averages. But notice the CCI is also bullish above its moving averages, but notice we've got a bearish divergence. Lower highs on the CCI versus higher highs on the price, so which means we may see a pullback at some point on the weekly. Now the daily is already started a pullback. You can see here, again, still bullish above the moving averages, but the CCI is actually broken to the downside. So that's a somewhat neutral positioning. I wouldn't be going long or short at the moment until we see, going short until we see this price break below those moving averages. Or alternatively, we might see a bounce from there with the CCI breaking higher as well. But at the moment, if you zoom out, again, you can see another bearish divergence here. And I've drawn a target range there. And that target range is measured, if I just blow that up for a moment, from that high down to that significant low. That's at 23-38% range of a target. So again, that's a minimum target if it hits this point, assuming the price continues to decline. Of course, the price can keep rising, break through that resistance, even if the CCI keeps dropping, as long as that price still maintains an uptrend, we're going to consider that a bearish divergence. So that's the daily, somewhat neutral positioning at the moment. Now, if you go to the 1 hour chart, you'll notice here it's already broken down below the moving averages of the price in alignment with the CCI. So that's a bearish move at the moment. Now, you could trade this on its own, but I'd like to see the daily also break below on both the price and the CCI to be more bearish in this case, to be taking trades. Now, in terms of a back test, what I've done, I've started it back here from this point to show you two different back tests. This is the back test, so starting back here, going long during that period, and then from this period going short. Again, these are aligned with the same periods on the daily. So if you go back to the daily chart for a moment, going long from this period when the CCI broke above the moving average, and that was when the price was also above, you would have gone long during that period. You would have closed out long positions at that point when the CCI broke into the moving average range, and then started going short potentially from there. But again, I'd like to see that break below the moving averages to confirm short trades. So again, going back to the back tests, so that's our long positioning, as mentioned from the daily, and closing out your long positions at that point, and then starting to go short. So you can see there, and the way this trade works is we take long positions when the price is moving higher, and so is the CCI, and we have a fresh breakout to the upside of the CCI 14 here. And then we close that out with a 0.3% gain. You can see here, for example, both the price and the CCI were broken above the moving average. That one just made a little false break, and that little period there was a incline, meaning you enter the trade. Now here it retraced, then broke up again, and you would have entered another lot there, and then closed it out with a 0.3% gain. Here we've entered in 1, 2, 3, 4 lots of trades or contracts and closing it out. So during that period, going back to the 11th of August, this is a 1 hour chart, you would have generated about $7,500 going long. No trades currently long on the long positioning, and on the short positioning going short from this period, average down once there and a single trade there, and that would have been about $300 worth of trades. So the NASDAQ's got a similar pattern. On the weekly here, the price is above the moving averages. The CCI on the weekly likewise is it's just about to touch that moving average range of the CCI. So if you're going long trading the daily, I'd suggest you probably close out your positions on this one. And here we've also got another bearish divergence, lower highs on the CCI versus higher highs in the price. And again, still somewhat bullish, but again, just be careful about going long at this point. You can see here the daily as well has actually reached this resistance, and it's bouncing down from that. Currently, both the price and the CCI are below the moving average, so it's taking short trades only at this point after going long for some time. Now notice back here we had a bearish divergence, a bit hard to see on this one, versus that point there, that was a bearish divergence, and it finally broke down, and finally breaking down again. It broke down once, and it looks like it's going to make a second attempt to break below that, into that target range. So on the daily, it's bearish, which means you take short trades only on the 1 hour time frame if you're trading the 1 hour. And on the 1 hour here, you can see very clearly we've got a few short trades that could have been taken, and more recently at this point, and you would have closed out your last position there, and you'd still be in the trade with a short position at the moment going short, and wait for the CCI to break into that moving average range to close out your positions on the 1 hour time period. Now looking at the back test for this one, again going long during this period, no trades would have been taken. Now, again, with this strategy, what we need is to see the CCI down here going long, and here you can see it's going short during that period, going long there, but also wait for a fresh breakout of the CCI 14. So it needs to meet a few parameters, long on the CCI 150, long on the moving average of the price, but also a fresh breakout to the long side of the CCI 14. And at that point, it wasn't a fresh breakout, so no entry made. And during that whole period, there were no long entries made for the NASDAQ. At this point here, we're going short. The CCI was in decline, so was the moving average of the price, and we had a fresh breakout to the downside there, ever so slightly on the CCI 14, and that entered one lot of trades, contracts, broke up, entered another lot there, and it closed out, and you've entered a single trade there, and currently that would have made $130 going short only. So don't forget to reference the +1 videos. We'll give you a deeper dive into our trading strategies, and hit that like and subscribe. That would be greatly appreciated to help support the channel. Thanks, and see you in our next video.